Whales have just accumulated more than 130 million XRP as the token briefly dipped toward the $3 support level. Data shared by Ollie_charts on X shows that wallets holding between 10 to 100 million XRP increased their balances during this drop. At the same time, Nature's Miracle announced a $20 million XRP treasury program, which may have added momentum to this wave of large-scale buying. But the real question is, what does this mean for the next price movement? Analyst CasiTrades explains that XRP recently tested the $3.21 resistance but failed to break above it. Now, after retracing to $3, it has completed what CasiTrades calls a Wave 2 correction, landing precisely at the 0.854 Fibonacci retracement level, a zone that historically signals a strong bounce. According to him, if XRP holds this support, the next target is around $3.82, based on the 2.618 Fibonacci extension. He also points out that this level aligns with a previous all-time high, which makes the projection more significant. While whale accumulation is clearly strong, derivatives market data tells another part of the story. According to CoinGlass, overall trading activity has fallen. Volume dropped by 37.07% to $15.43 billion, and open interest fell by 5.77% to $8.87 billion. Even more striking is the decline in options activity, which is down more than 75% for volume and nearly 95% for open interest. This indicates that traders are taking fewer aggressive positions ahead of what they expect could be the next big move. Yet, despite the slowdown in activity, sentiment remains bullish. On Binance, the long/short ratio for XRP stands at 2.82, meaning that most traders are betting on upward price movement. OKX shows a similar ratio of 2.08. Even when looking at the broader market, the 24-hour long/short ratio is nearly balanced at 0.908, which suggests that while some caution exists, optimistic positions are holding strong. It's worth noting that XRP's current price, according to CoinMarketCap, is $3.14, down about 1.41% in the last day. The recent dip has been partly linked to large transfers, specifically $175 million XRP sent to exchanges by Ripple co-founder Chris Larsen. Historically, such moves can create short-term selling pressure, but analysts like CasiTrades argue that whale accumulation during these dips often sets the stage for bigger rallies later. Looking at this data together, there's a clear tension in the market. On one side, whales and long-position traders are signaling confidence, buying aggressively at lower levels. On the other, reduced derivatives activity suggests that a large segment of traders prefers to wait, avoiding heavy exposure until a clearer breakout is confirmed. The key point here is that XRP's near-term path will likely depend on whether it can hold the $3 support zone. If that level remains intact and buying pressure continues, the probability of a push toward $3.82 increases. However, if support breaks, the bullish case could weaken, and short-term volatility may rise. For now, the market seems to be at a critical moment. Heavy whale accumulation, cautious trading activity, and a price sitting just above key support. Whether this turns into the next major rally, or just another pause, will likely be decided soon.